Ba, ba, ba. Okay, testing, testing. 1, 2, 3. Okay, I think we got that. What an interesting morning. Yeah, okay, good. We do have sound. We do have visuals. Cool. We're getting close, right? Thanks for your patience, guys. Yeah, the broadcast software decided to do a mandatory update and delete everything, all our information. All right. Well, anyways, I guess we need to start. Give me just a second or two. Get my wits about me. Un momento, por favor.
Crude
Okay.
futures now
Good morning.
retreating
How's
the
everyone
lowest
doing?
levels since.
You know what I need? I need the chat. I hate how the chat's not part of this. Mauricio, can you get me the chat? So it seems like you have visual. That's pretty good. You guys have sound. That's pretty good. Got something to be thankful for. So let me remind you that trading Forex is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ba! Morning. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. If you're a client of Traders Way, I do webinars for you Monday through Friday. Except for the first Friday of the month, I'm here at FX Street, and I believe this is Non-Farm Payrolls Live 133. Is it 33 or 32? Oh man, I grabbed the wrong presentation. Good enough. Is it 133 or 132? $132? Cool, that's a long time. How many people have been here for 100? Has anyone been to 100 of these webinars? Ben says yes, or no. Yeah, Ben probably has, but I think he's talking about something else. 131? That's a long time, huh? Adam's good. Yeah, gotta be close. 100? That means we've been trading this event so long that we've picked up some gray hairs and probably 10 pounds along the way. And hopefully more than a few pips, huh? Ed since 2008. I remember 2008. That was awesome. I think that's when my book was released, wasn't it? Seems like yesterday. We were so young, so pretty. Is anybody here for the first time? I know there's a lot of YouTubers. Well, I'll never forget the first time I saw non-farm payrolls. I didn't even know it was non-farm payrolls. In fact, it was so long ago I didn't even know news was important to forex trading. And I was sitting on my couch, I had my laptop. It was 5:30 in the morning in California time, and just watching the market and placing a trade. I'm like, gee, the market's really quiet. And then all of a sudden, just turned 8:30, and the market jumped 300 pips. And I'm like, wow, what is that? Yeah, and that's how I learned that news was important. A couple of first timers. Well, namaste. So here's our rules of engagement for today. I'd like you to ask questions. I'd like this to be interactive. We have 3 hours today to work together. First part is to get you prepared for the news scalp, the high volatility and event-driven strategy that that we'll use for this opportunity. And then once we're all prepped, the news is going to come out, and then we take care of business, which often lasts 20 minutes, right? And then what? Then we'll have maybe just another half an hour to prepare for the stock market open. That'll happen. And then I don't think we have any serious news at 10, do we? I got distracted trying to get this webinar up and running. So I don't have my notes in front of me, but I don't think we got anything important at 10 today. It's not like we have ISM services or something. And then by 10:30, we'll call her quits. What do you stink? Smell like a plant? Albert says that's how exactly I started, Wayne. I had no idea. Found your streams, and today I walk around with a $35,000 Rolex, thanks to you. Well, you didn't even buy me a swatch, Albert. Gee whiz. Yeah, that's a nice Rolex. Good for you, man. I got a Rolex on right now. It's like 10,000 years old, but still. All right, so yeah, so that's sort of the agenda for today. So for those that are new, I love questions. If you think about it, we have a news event at 8:30, and so besides handling that, we have at least 2 full hours for me to address, te- you know, trading techniques, whether it's scalping, spot, swinger, position trading, swing trading. I could talk technical analysis, fundamental analysis, so on and so forth. Yeah, thank you, Albert. Relax, dude. Relax. That's cool. All right, cool. So, anyways, participation. Get involved. Don't be a lurker. So let's not do this quite yet. So let's talk about the world. So cruise missiles landed and blew up an airport in Syria. Take that, Assad. We blew up your runway. Um, but geopolitical risk can really move the market. Generally, in a geopolitical risk scenario, you see safe haven flow. So, for example, the US dollar often gets strong. So, yeah, and so Carol asks the question that I'm addressing right now, will it affect anything today? Well, yeah, probably, but it happened, many, many, many hours ago. So for most, it's already been priced in. But the in a scenario, so what, no matter what it is, and geopolitical risk are things like war or such, unplanned events, and cruise missiles count. Anything where like missiles are in the air, things are being blown up. Um, that's the scenario we're talking about. When something like that happens, the U.S. dollar tends to get strong. Okay, so you want to look for that. U.S. dollar stronger than yen or gold? Well, depends. I mean, it depends on what people do, right? So you'll have to take a look at that. Maybe you want to own gold. Fine. Yen, yes, that does count as a safe haven flow. But you notice that not a lot happened with the yens, huh? Right? So, and the dollar's moderately strong. So nothing major's happened yet. But that's why we want to be together at 9:30 when the stock market opens. If there is going to be a reaction, at least we'll be together to handle it, right? So, anyways, so we got that going on. Uh, Big talk about the Fed finally going to reduce their balance sheet and stuff like that. That's not going to happen this year. That'll happen next year, but I guess we need something to talk about. But what happens when the Fed starts winding down their balance sheet? They have 4 trillion. What's the impact of that? I wish I had a drawing tool. I don't know if I have a drawing tool here. I don't think I do. I got a naked PC. I haven't installed almost anything. Wonder if I could use Paint. Come on, Windows 10, help me find Paint. Let's see if this will work. Okay. Okay. This is a demand curve. Oh, gee whiz. My mouse is difficult to use. All right. This is demand curve. This is a supply curve. And this is of money, right? And this is an interest rate. Okay. That's I. What happens when the Fed sells assets from their $4 trillion balance sheet? We're talking about its impact on money supply. I just got an alarm. Brazilian inflation. Oh, wow. Okay. Okay, well, I'll just keep doing this. A few people are answering. Okay. All right, so the Fed sells some of the assets from their balance sheet. So let's say they take $1 billion of assets and they sell it to Goldman Sachs. What happens to money supply? Well, Goldman Sachs has $1 billion in their bank account. They send that to the Fed, and the Fed in turn gives them the actual bonds. Wait, you guys can't see what I'm drawing? Oh, you know what it's doing is it's displaying the platform but not the screen. God dang it. This is way too complicated. Yeah, no, yeah, you can't see it. So it was displaying the window. Video capture device, media source, image, game capture, display capture. Let's see if I can remedy this. Whoa! Yeah, see, it just can't do it. So for some reason, it can't do the. Oh, it sucks. Let's just put it that way. So what do you see now? Seeing 8 windows, no charts. Yeah, hang on. Yeah, hang on. Now I can't get rid of it. makes me so happy. Makes me feel so good. Hey. Anyways, you got my chart or my drawing, right? Cool. Well, we got something. I'll have to figure out how to get back to the other thing. Okay. Can you confirm that you can see my drawing? Hello, my name is Simon, and I like to do drawings. Yeah, okay, good. All right, so the Fed sells some bonds to Goldman Sachs. Goldman Sachs takes money out of their bank, aka supply, and give it to the Fed, and the Fed gives Goldman Sachs bonds. So if the money is left the money supply and now sits at the Fed, money supply has contracted. So I'm going to change the color here, and it's going to shift this way to money supply 2, okay? Which means we have a new equilibrium that went from here to here, and now you got interest rate number 2, I2. And therefore, let me change colors one more time to green, let's say. Interest rates went up from 1 to 2. Isn't that interesting? So it has the same effect as raising interest rates. Okay. So when are they going to start doing that? Well, they want to get interest rates to somewhere relatively normal, but low, maybe 2%. And then they want to start unwinding their balance sheet and reducing money supply, which would have a very similar impact. Okay? Neato, right? Okay, hang on. Trader's Way live. Booyah! So you should have the charts back. Cool. Well, that wasn't smooth, but at least we got her done. We got it figured out. So that's another question that's on people's minds. How fast is that going to happen? When is it going to happen? And let me just tell you, it's going to be next year. So don't worry about it, huh? Right. Webb says NFP about 200 today. Challenger cuts for more than yeah. Yeah. Whatever. Look. There's nothing that suggests NFP will be unusual. It shouldn't be significantly above average. It shouldn't be significantly below average. If you look at things like the ISM reports, weekly trends, all these things that go into predicting non-farm payrolls, and I've already taught you how to do that. I've already taught you how to model so that you know how the experts come up with these numbers, right? And Webb mentions the Challenger cuts and stuff. Yeah, okay, that all goes in the model. And, well, so it should come out as expected, right? Albert, they're pivot points. Okay, they're pivot points. So just get a pivot point indicator, and you'll be fine. Okay. So anyways, what time is it? Got a pretty late start. All right. So before I go through all the charts, I guess we'll save that for later. If you can, please take a screenshot so that you can get a visual on my chart setups. Yep. Albert, I use daily, weekly, and monthly pivots. And I just did a 1 month long swing trading class, and we rely heavily on weekly and monthly pivot points for swing trading. And we just concluded that class, and I thought it was very, very successful. I was very happy with how the market treated us last month. It was very good. All right, so you must have a screenshot here. Good. So in this high volatility event-driven strategy, we're going to do some scalping. But in general, I want to show you what I look at in the market to read the market conditions and then apply the appropriate strategies for said conditions. First thing I do is I measure the speed and the direction of the market, and I use a combination of 21 and 55 EMAs. Wait, you can't see this, right? I have to share. Just realize you can't see this. Come on. I guess we'll have to figure this out for next month, because this is a ginormous pain. No, that's a display. That's not supposed to work. Cancel. Oh, now it's going to show that instead, even though I said cancel. Great. Okay, that should work. Albert, if Amazon.com doesn't have it, since it's like the largest bookstore in the entire world, you might want to try the Vatican. I think they have one locked down in the basement somewhere. So, anyways, you should be able to see the PowerPoint now. Take a screenshot so you can go back and check out the setup. Cool. So to measure the direction and the speed of the market, I use the 21-55 combination. Okay. So if the 21 is below the 55, the market is technically bearish. And the larger the angle and separation, right, the more aggressive the market is. Now, if you can't make a judgment call on that, just use a MACD and put the settings at 21.55.8. Now, as far as actually pulling the trigger, that is done with a 5/8 cross. Okay, so if going backwards here, if I was a bear, as you can see, the market was already bearish in this scenario. I know to pull the trigger and sell as the 5 crosses below the 8. And then I know to take profit when the 5 crosses above the 8. Then the market started to braid, and that's an opportunity to lose money if you want to trade it. Fair market value is set by the 200 EMA. And by fair market value, what I mean is that's where the bulls and the bears agree on the price. And that very, very rarely happens. Volatility, you can measure that with Bollinger Bands. I guess you could use PSAR if you wanted. And then what I do for overbought and oversold conditions is I use a set of oscillators. I slow the MACD down by changing the 21.55.8 in the setup. But the reason I do that is I'm really measuring what's happening with the 21.55. And then with price action, what I do is I speed up the stochastics, 835, and I use that for overbought and oversold conditions of price. MACD, in contrast, is overbought and oversold conditions for market forces and price action. And then, of course, I look at that on multiple time frames. So what we're going to do today is a scalp. So we can go back to all that other stuff later, right? Okay. So what'll happen, we'll use a 1 minute chart. Maybe I'll do like pound dollar, for example. And the market will move when the news comes out. How much will it move? I don't know. How could I possibly know? Now, it'll move more if the market is surprised by the result. If it comes out 99,000, that would be a shock. If it came out 263, that would be a shock. And they would have most likely different effects on the market because those two numbers have not been priced in. But if it comes out sort of like the 150 to 200 area, well, that's kind of what we figure. So it's already been priced in, right? But anyways, what'll happen is the market will react and you'll see a bunch of 1 minute candles take off and we'll say, good. In this case, we see green candles. So we say, oh, guess I'm a bull. But every successful bull knows that you do not buy high. If you're a bull, you buy low. So what you're doing is the initial response of the market is up. And you say, I'm bullish. And now your job is to wait for retracement so you can buy low. So what you do is you let it go for a little bit and you look for the inevitable pullback. I call this the line in the sand. And if things go well in this scalp, we're going to recharge that line. And if we get lucky, it's going to break north and we make money. If we get unlucky, it's going to collapse back down and hit our stop loss at break even. So the idea is to get to hero or zero. So in this case, that would be the line in the sand. And once you have the line in the sand identified, what you're going to do is use a Fibonacci retracement. And you're going to look for a retracement back into the sweet spot. Now, typically the sweet spot is somewhere between that 3A2, 50% and 618 Fibonacci retracements. And ideally, it just comes down here. And if you can look at this previous high in the middle, that should also be a good gauge where price should retrace and then extend. In true Wayne fashion, I give you an example that's not perfect. In this case, it came down a little bit more than people would have liked. It came down 786. Right, a little bit lower than this, lower than our little sweet spot. But nonetheless, it came down, hit 786 and held. And the next one went up, and the next one went up, and the next one went up. So somewhere in there, you need to get long. And really, probably on the green candle, the one after is where you're long. Because you want to get long near the 786, put your stop just below the lowest low, and now you're only risking 20 pips. You get it? So if things go well, it takes off and you make money. If things go bad and it makes 100%, in fact, 121.4% retracement, well, you went long in a reversal. You didn't know that was going to happen, and you lost a little bit of money. You lost 20 pips. And that should be nothing compared to your account size, right? It should be nothing. And the upside should be significantly better than 20. Okay? So in any case, you want to get in low. Now, if you're in long here and your stop is down here, in the 4 or 5 minutes after you go long, you should already be profitable. Okay? And as you head back to the water line, sorry, the line in the sand, what I want you to do is then move your stop from down here, move it to break even, so that when you get ready to challenge that line in the sand, if it collapses and falls back down, you lose nothing. If the line breaks and it heads up, you get paid. Okay? So here's the moment of truth. If it breaks, you get paid. If it drops, you had the opportunity to win, but you removed the risk. And of course, in this case, it breaks. So that's what we're going to do today. Just a high volatility event driven strategy. So look at that. This is now showing. I want it to do this, but up on that screen. For some reason, it doesn't recognize all my video cards. So let's go back to, and then I gotta go bring it. No, not that one, this one. Do you take profit at fib extensions? I think we'll use support resistance more than fib extensions, okay? So my watch says we have what, 10.5 minutes? Oh yeah, what time frame? 1 minute, guys. It's a scalp. So I propose we use Pig Dog. There's nothing wrong with Pig Dog for this. I gotta change the setup here. Mm, mm, do, 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 do. And just for fun, let's do this one. Boom. So 15-minute here, 1 hour here, 4 hour here. Looking at this, we have the 2155 EMAs like I showed you. Okay, the 5-8 cross, the 5-8 like I showed you, the 200. I don't have the MACD, but here's the oscillator, the stochastics for overbought and oversold conditions for price. Okay, so just want to show you where we are. Currently, we've been in a downward move, as you can see. Okay, currently there's a top here, which is actually predicting a retracement down to that area. So the trade plan on Sunday night, Monday, was to trade this down to this level. Okay. Okay. So what we want to do now is identify support and resistance. Come on, Bubba. Won't let me grab this stupid thing. There we go. All right. So let's identify support and resistance. Okay. Do you see any interesting clusters? Well, we are on the monthly central pivot right now. So that is going to be a problem. And we do have, we do have a pretty important level of support right here. So I think we need to mark that. The next thing that I see is this is set for the pound dollar on Monday. So why not have that come down and hit that today, right? That's where we want to go. Okay, if this was a sell zone on Sunday, this was a sell zone on Wednesday. All right, we're supposed to be down here by the end of the day. So we need to keep these levels important. What about the upside? Well, we have a cluster here as well. So really what I want to do is this is one sell zone. And this is still a sell zone from before. So I'm going to mark these. They may come up important, right? So if this spikes up today, this is still probably a sell zone, but you got to be careful because of the higher high. And if this breaks, okay, We'll have to deal with it then. Okay. So back yourself out here. Okay. Will you sell M2 if it spikes up and then drops? If you're a bull, we're on a monthly buy zone right now. I don't know if you know that. So let me go back to this. Let's look at this from a longer point of view. Not that long. Okay. If this drops down today to to this green zone down here, it's actually a buy zone for bulls on the monthly. So if there are bulls in the market, they actually want to raise this from the area where we are now, which is 124, sort of 120. What is it? 124.30. So this 124 area all the way down to 123.20. So between 24 and 23 is actually a buy zone for those that want to drive this up to 128 some change, 128, 129. Okay. So long term, so let's say short term, I think everyone wants us to drive it down here, and then some people want to drive it back up to here. All right. So the projected April high is up here. Okay. Do you have that? So ask yourself, are you a bull or a bear? We have a few minutes. We can take a look and see how the rest of the market's doing. Okay. Gold has hit the projected high for the week and is not supposed to go any higher. Okay. Obviously, this is impacted by the geopolitical risk. And I've already identified support and resistance, so I don't need to do it again. Take a look at crude oil. Taking a looking. This was supposed to come down, and it's gone up again, probably on geopolitical. Okay, so we spiked up sort of not quite 54, but in the neighborhood. You notice how we hit the projected high for the week and it came back down. Now, for based on technical analysis, I thought there was a reasonable chance that this would hit the 52.70 area. I guess we're still there. And then come back around. We have 52 marked, but I believe I was talking 52.70. Okay, maybe come back around. Okay, but this is the projected high for the week. So maybe that should come down. Okay. The sad thing is it was a little overbought, right? It's a little overbought on Sunday/Monday. So this was a hard one to trade to the upside, even if you're a bull, unless you were in it before. But if you bought it as a bull this week and made money, first of all, congratulations. But second of all, you bought it high and it happened to go higher. And those are pretty risky trades. Okay, we're about 90 seconds away. Commentary by TradeTheNews.com. By the way, guys, if you want to trade with me every morning, just open a live account or a demo account at tradersway.com, okay?
March employment data in just a few seconds. Ninety-eight thousand, well below the 180,000
98,
expected. Prior
98,
buys lower to
98.
219,000 from 235,000. Unemployment dropping to 4.5%, 0.2 lower than expected. Hourly earnings 0.2 is in line with expectation, 2.7% year over year. Also in line with expectation, back month hourly earnings revised up to 0.3%. Weekly hours at 34.3 is 1/10 lower than expected, with the back month revised down 1/10 as well to 34.3. Labor force participation 63% is unchanged from the prior. Underemployment at 8.9%, down from 9.2% prior.
You watch, they're going to
For
blame the weather.
Canada, 6.7% unemployment is in line with expectation. Net change in employment 19.4 thousand above the 6,000 expected.
Did you catch it?
Initially, we've seen bond futures take a little bit higher on the miss on the non-farm payrolls number, 125.22. So we have bounce above where the highs we saw overnight following the Syria news in the 10-year note future, the 2-year yield falling back towards 1.2%. So money continues to flow into U.S. government bond markets following the somewhat disappointing jobs report, at least initially. Equity futures have given back some gains back below 2350 in that S&P E-mini.
Back in the buy
With
zone.
debt
Oh,
rising
you might have missed it.
32,000 compared to the prior 124,000 increase.
A lower than expected non-farm payroll number likely will be attributed to the winter storm early in the month. Construction jobs are up only 6,000 in the month.
Sam, I don't think you get it, Sam. It's not the news feed, it's YouTube, bro. So anyways, you had two opportunities on the 50%.
Gains in non-farm payroll the lowest since last May when it came in at 38,000. In a negative reading since October 2010.
All right, so 100,000. So maybe this is good, maybe this is bad, maybe it has to do with the storms early in the month. But what if, excuse me, sorry about that. What if it's just that everyone that wants a job has a job? What if it's the labor pool? What if there is nobody to hire? I mean, America doesn't make engineers, it makes ditch diggers, except diggers are too lazy. Lazy ditch diggers. All right, back to the 50%. This is a third test of 50%. Seems like there's more bears still than bulls, right? Let me remark some of these things. %50 predicts the 1382. If we're going here, it's a 121.4, which predicts a 786 retracement. Oh, there was a question about moving average for a 15-minute chart. I would say a 21 EMA, not SMA. Okay, getting close to that line in the sand, right? Boop, 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 boop. It's dangerous because really I see this as counter trend. So you're not supposed to spike into the resistance, right? In a downtrend. You're not supposed to spike up in a downtrend. So every move up is dangerous. USD yen doesn't seem to be moving much. Aussie dollar trying a little bit. Aussie yen down, Kiwi yen up. There's confusion. CAD yen all over the place. The Canadian jobs were much better than expected, but CAD actually fairly weak, or compared to the dollar, anyways. So, all right, so we're almost to that first target. So perfect pullback into the sweet spot. So far, very textbook. Okay, turning red right off of our resistance. Cool. Let's take a look around the world. This is our pound dollar from yesterday, I believe. Or did I just do this today for you? No, I think I did this yesterday. So we'll see if we can get out of there. All right, take a look at Euro USD. Go into a smaller time frame. Really small time frame. Come on, get in there. Ginormous spike. Immediately retrace back down. Downtrend remains intact. USD yen, you can see, as I mentioned before, hasn't done anything. What I was hoping to do is play this as a double bottom, and it's just failing. It's just still failing. Okay. CAD, okay, has been and still is a counter. On Monday or Tuesday, we set this up as a counter trend. Pretty neat, huh? So this is a counter trend down trend set up to fall. Target is weekly central pivot point, but what is it today? Friday? We did that on Tuesday. So yeah. So it's taking its time, but it's doing what it's supposed to do. Now Aussie was supposed to counter trend back up, which it did, but not as far as one would hope. Came back down, double bottom, started to go up like it should, but then it totally collapsed on us. And now is appearing to want to continue to play in the game to the downside. But I find it very difficult to sell near the weekly S2, no matter how bearish it is. Might be something we pick up next week. So if you see here, this gray box was the Sunday night, Monday morning sell zone, and the target was this gray box here. So all these pips were made in the first 24 hours of trading, and then all this nonsense is just sort of danger zone, mediocre trading. Okay, so Aussie is a dog, but I don't want to get involved with that right now. This is Noki. You can see on, I guess this is Tuesday, maybe Wednesday. I had this as a short zone. It fell, retraced back, it fell, retraced back, fell, retraced back, and is falling again. You can see this fib. Let me move it out this way so it's easier to see. You can see I have it pointing down, which means this retracement, or in fact it's a reversal candlestick pattern, this bearish engulfing candle, was part of the original sell up in here, and it did make it back down to support. It just didn't follow through. But it held again, and held again, and held again, and held again, and now we are now. Okay, I think I got to go farther back out. So you can see the top there, why I have it set as resistance. You don't have to be a rocket surgeon to see that. Well, Albert, it's because nobody wants to own euro. So you can see major safe haven flows right now. So the question had to do with euro. So the trend is in place, guys. Now, the sad thing, and it's sad but true, we're hitting our monthly bearish target already. This is where we're supposed to be. So the low this month is 1670. 11670 is the projected low for the month. But we're in the first week of the month, which either means a horrible sideways action for the rest of the month or retracement back to the central. But it's a clear sign that the rest of the month is not going to be great. Yeah, wow. So some of these are really taking off now. So let's go to the CAD. So remember, Canada had a good non-farm payrolls, and it's starting to bounce off of this. You see, not only is it the weekly projected low. So again, on Sunday, this was the sell for CAD yen. This was the target. I mean, perfect, right? And then the counter trend was supposed to take us back to the central, never quite got there. Double bottom again was supposed to take us up because a double bottom now is a reversal pattern. Still hasn't happened. So like some of the other pairs dropped and stopped. Okay. And now maybe we have the catalyst we needed. So the Canadian jobs report was very good. Okay. They thought they'd get 6K, they got 20K. Okay. So if you can see the initial reaction here, okay, boom, 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 boom. This should be a roll reversal in here. I should mark this area as well. I guess it's about the same. You could fib it this way. It's all the same. We can go back to gold, but right now I'm on the yens. Aussie collapsing. So yen is strong, right? These are safe haven flows. So what you're starting to see is the dollar is starting to get strong again. The yen is starting to get strong again. The Swissy is probably getting strong. Let's take a look at our friend the Swissy. And that would also, all of these would come down on safe haven flows. So it looks like Aussie Swissy's trying to head down, Euro Swissy's trying to head down, Swissy yen. Yen is even stronger than Swissy. And pound Swissy's heading up. So you got to be careful with the pound. But what it's showing you is you should be short Aussie Swissy, Euro Swissy, Euro dollar, Aussie dollar, Euro yen, Aussie yen. Dollar once again gaining a lot of strength on the safe haven flow. Aussie has now made a new lower low. Total breakout here. Yeah, it's kicking off that resistance, Albert. So as cool as this looks, we're still missing information. And it's helpful to have the pivots, I think. This should be a sell zone. No, I'll do gold in a second. Just let me get to it. Okay, remember this gray area is where your new sell zone is. US dollar continuing to get strong, and it's now overpowering the CAD, and the CAD was stronger for a while. CAD looking really nice. We have a request to do gold again. Okay, this is where everyone is going to take profit, and they may have already done it, and that's 1270. So that may have already been it. Dollar is strong, so this is supposed to come down. The funny thing is on Sunday night, I mean, it's Friday morning, right? On Sunday night, Monday morning, the projected high was 1,270 and 50 cents. Okay. So it's already been foretold. Okay. The buy zone for gold on Sunday was right here, and the target was the red zone. So if you ask me, it's just all it's doing is fulfilling its destiny, and it should come back down. Okay. And because we haven't breached the upside, there isn't really a counter trend trade. That this is just profit taking. And I can't really predict whether this will continue next week or not. If we were higher, then the answer would be different. But because it got out at the projected, all I know is bulls took profit where they were supposed to. All right. And the bulls are supposed to buy it right here. I don't know if you know this, but in my swing trading course, I taught people, that's your buy. That's your buy zone. This is your target. So the buy zone was perfect, and the target was perfect. But now that we've done all that, now it's Friday. We've hit the target. Where is it going to go now? Well, I don't know, but I can tell you this is coming down on profit taking. If I did another swing trading class, like let's say in August or something, or September, would, oh, excuse me, I'm yawning. Would anybody be interested in doing it? Thing is, I don't believe I will be doing it again, so it'd have to have a lot of demand. Yeah. Yes, it was $1,000 for the course. Just watching gold bounce off the old pivot here, the roll reversal. But again, I wouldn't buy it here. You could have sold it up top, just but I don't know. I think it's dead. Oh, you know what, guys? You know what we discussed last non-farm payrolls? We were chit-chatting near the end, so I don't know if you stayed to the end or not, but we were chit-chatting at the end, and we, as a group, we sort of we came up with this idea of me doing a week-long event with me teaching people how to raise money from investors and do uh, sales pitches, road shows, um, investor presentations, sitting down with clients and discussing your trade history, regulatory and compliance issues, legal issues, structural stuff. Basically a hedge fund in a box idea. And I think the price was 25,000 US dollars, and I think 4 or 5 of you said yes. Um, so we've already started looking at hotels to do that event, and we're thinking November. So we'd spend the day by the beach discussing how to manage a hedge fund and how to raise money for your hedge fund. And then at night we'll get in like helicopters and fly out to wineries and have like a 7-course meal and wine tasting with the vintner and sommelier. So I think we could have a ton of fun, but actually you'll learn a lot. So it's not a trading workshop. There's lots of people that give you a trading workshop. This is something that you probably don't have access to. No, no, how to run a hedge fund, how to start a hedge fund, how to raise money, how to attract investors and stuff. No. There isn't anything out there that I know of. So anyways. Yeah, okay. So we got a question here. Why was NFP 98K? Well, there's the guess and then the facetious answer. The facetious answer first is it's fuzzy logic. They do a random sampling of households. They do a random sampling of establishments, creating the household survey and the establishment survey. Establishment meaning businesses. They on businesses they look at payrolls. At households they simply ask people in a survey fashion, "Do you have a job?" Okay. Yes, Sam. Yeah, 25,000 US. Okay. So this is again, this is for people that are near or want to raise millions of dollars for a hedge fund, right? Not trading, but how to sit down and discuss risk adjusted performance in your trading history so that clients understand the risk that they're taking when investing in you, that kind of stuff. How to stand up and do a PowerPoint presentation, raise money, and address questions. How to create one-page sheets. Negotiating contracts and fees, and legal stuff. All right. So anyways, question about why the 98. So they might have just had bad data, and then what'll happen is they'll continue doing data. Right? They'll get more info, and maybe next month we'll have a huge revision, and they say, no, it's not 98, it's 163. And that happens a lot. Okay. Now the second part of why was it 98K? There was some pretty bad weather recently, right? And what that does is people don't go to work. Well, if you're not going to work, you're not hiring and stuff, right? And then some of the other data. Now, I didn't look at it, but if you're looking at average hourly work week and earnings and stuff, that could also be affected by this. Because imagine you don't go to work. So, like one of the days, I believe in New York City and Boston, uh, people didn't go to work because of this storm. Was right? There was a blizzard that was supposed to shut all these cities down in the Northeast. So people didn't go to work because it was too dangerous, right? And then the storm shows up and it wasn't that bad, but they still took the day off, right? So what happens is some people are not working, but what about those that are on salary? They didn't work, so their average hourly, the hours they worked went down, but they earned the same amount of money, which means per hour they made more money, and that can start skewing all these numbers, right? Cool. Yeah, 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 Peter, you're in for that, right? Yeah, so Albert and Peter and Henley and I think there was two or three more people. So the idea is we'll get together in Cape Town, South Africa in November when it's summer, and we'll hang out at the beach during the day doing serious work, of course. And then do wineries, shoot some zebras, do your typical stuff at night. No, I don't know, Ed. I've done it, but if people wanted to do it, it's something that I could do. But I imagine, the very first day we go in there and like, what is a hedge fund? What are the different structures for hedge funds? What's the difference between a hedge fund and a managed program? Stuff like that. Just kind of start from the very beginning. All right. Which trade should you enter now to bring back a little cash I lost? And I noticed that you blamed someone else for you losing money, which is really funny. Um, but anyways, I'm supposed to tell you what to do to make money now? What you should do, and this is no joke, okay? I want you to, first of all, stop trading today. Second of all, I want you to get out like, let's say, a PowerPoint slide, and I want you to pick one currency, whether it's a pound, a dollar, Swiss franc, Aussie, CAD, whatever. Just pick one currency. And I want you to very clearly at the top in the headline say, let's say Aussie, right? Aussie dollar bearish or whatever. US dollar bullish, whatever you want. Just very succinctly, and I mean between now and the end of the year, that's what you're going to be. A bull or a bear, okay? On one currency, not a currency pair, just one currency. And then down in the main part of the PowerPoint presentation, I want you to give me 3 or 4 bullet points that explains why you're a bull or a bear. I want you to very articulately discuss why you're a bull or a bear on that one currency. Okay? With that being done, I want you to carry out that strategy. Now, the strategy is simply whether you're buying or selling. So, when strategically speaking, you either buy it, you either sell it, or you don't buy it or sell it. Right? You're neutral. And whether you buy or sell or not buy and sell throughout the year has to do with market conditions, but it most likely isn't the fundamentals. All right? The fundamentals haven't changed on these currency pairs for a couple of years, right? So if you're a bear and the market's bullish, you're probably not selling. If you're a bear and the market's neutral, you're probably not selling. If you're a bear and the market's falling, you're probably selling every rally and retracement. Okay? So good. So anyway, so you got to have that fundamental part down. Moving on to the next, then what I want you to do is use technical analysis to discern the market conditions for your trading. But what am I looking at here? This is pound dollar. So I drew this last week. You can see we started selling this last week. You can see on Monday I sold it, right? On Tuesday we predicted a counter trend back to the central pivot, but I also have a fib zone. So here's my sweet spot, the 3A2 to 618. And you can see not only are we making a series of lower lows and lower highs, but I'm also projecting on Monday of this week that we should head down to this pivot cluster, which I explained today. But you could have did this on Monday if you were like using a basic swing trade strategy, and you happen to be bearish on the pound or bullish on the dollar, or both, right? But Monday's target, right, or Monday's sell zone predicts this target. So you could have spent today simply looking for opportunities to sell in that direction. Do you see any? Okay. And that's how you make money in Forex. Right? Where you're still carrying out. Cameron, dude, I've done it twice since you've been here. I know you walked in late, but I did it like 8 minutes ago. Did did my screen freeze, guys? Did we not look at it and we hit the weekly target based on the monthly or the weekly entry on Monday? It went all the way up. We hit the R2. It's a take profit zone. There's no reason to buy it up here. There's no setup for counter trend next week. Right? I mean, didn't I cover all of that? Charles Bond, Wayne, is the swing trading course available to buy after it's finished as a... You know what I could do? I mean, people that paid for it can log in now. You know what I could do is I could release the I think what I could do is I could release the course as a video course only, but it's like 9 hours or 10 hours. I could release it as a video course for cheaper. I think if I did that, what I would do is I would ask you to become a client of Trader's Way. If I was going to do that, I think that makes sense. I could give you like a coupon code and only give it to people with live accounts at Traders Way. I think if you did that, I would give you a huge discount on the course. Yeah, Peter, right? I did it before and after the NFP release. Yeah, okay. Yeah, okay. We got a question here about Aussie dollar using fibs. Okay, Aussie dollar doing the fibs. Doing the fibs. All right. All right. How about like a 60% discount for the swing trading course if you have a live account at Traders Way? 60 doesn't sound good. Maybe 55. All right, so let's go into here. Fine. Albert, no, I do, no. How about email me, Albert? Wayne at fxbootcamp.com. Okay. All right, so Ahmed. Okay, so what is it that you want here? Fibonacci, right? Okay. So I don't know what time frame you're looking at and stuff like. I don't know where you want me to fib. Okay. Ahmed, can you tell me like what time frame you want me to do a fib study? 1 minute, 15 minute, 1 hour? Because they all have different setups. Okay, 1 minute. Okay, so you're scalping. You're scalping your way south, huh? All right, so I would do it this way. Okay, is that what you're doing there? I would measure it that way because obviously the lower low makes it bearish, and a sell zone is here to here. Okay. Oh, so you're asking me like a basic thing. Can you use Fibonacci? Well, don't forget what it is. It's just simply uh, like a ruler. It's like you could ask me, Wayne, can you measure the circumference of the Earth using a ruler? Yeah, of course I could. Now, maybe it's less effective than some other tool, but it measures distance. You can measure any distance of right with a ruler. It's just right. So a Fibonacci study, it's just measuring retracements. So can you use it on a 1 minute chart? Well, yeah, you're simply measuring retracements on a 1 minute chart. Yeah, you totally can do it. Okay. So in this case, you're obviously a bear, and I'm looking at it this way, where a Fibonacci retracement, you're doing it to try to predict an extension lower. Okay. Okay. So 1 hour and 30. So all you're doing is changing your strategy. So this would be scalping short, right? Well, if you're scalping, by the way, all the yens are heading north now, led by CAD yen. And even USD yen just woke up. So all the yens just went weak. That's very positive global macroeconomically. All right. So anyway, if you're scalping, you're using a small time frame like this. Now, if you're using an hourly chart, okay, you're not scalping. Okay. And you're going to pick different peaks and valleys. So you might be measuring it this way. Okay. Okay. But in that case, it's the same. 4 hour, you'd be measuring it off a peak here or a peak here, right? Okay. You can see there are other things going on. So like, right? So what these moving averages are telling me is that, first of all, the market is bearish, and you sell retracements into the moving averages. Sell, 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 and you just so on and so forth. Okay. Lower low, trace, sell. Lower low, retrace, sell. How do you get pivots on your charts? It's MT4, so you download an indicator and you install it. So there are millions of ways of doing that. You could go to the market, for example, right? You could type in pivot points. Pivot. Look, these are all pivot points. You can download and install it. So whatever, find one that you like. Some of these are free. Some of them cost money. So this one's free. I don't know how good it is. Let's take a look at the screenshots. I don't know what the heck this is, but let's say you wanted it. Let's say you wanted it. You click download. That's it. You're done. Now you have pivot points. Okay. You can also go to Codebase and look for pivot points, right? So these are all things you can install to your MT4 for free. Some are signals, right? Right? Some are indicators, some are scripts, some are EAs. I have it just indicators. So indicator fib pivots, right? So look, I can install that. Just right click, download. Isn't that nice? Daily pivots. See? It's so good they can't spell daily properly. Download. See? You could do it that way if you wanted to. You can have Renko charts, overlay charts, tunnel indicators. I believe this ribbon I got from here. Okay. Pivot fibs. See, again, if you wanted that, you just download and it installs. What moving averages am I using? Well, I did show that before at the beginning of the event. I showed the setup. So they're all EMAs except for the 8. So my typical scenario is this. Get rid of this grid. Okay. Okay. The 5, but the 8 is simple, see? So they're all EMAs except for the 8. It's a simple. Med, these are funny questions, man. Draw a fib. All right. There. I drew a fib. You want me on? I'll do it on the 4-hour for you. Oh, is that right, Joe? Because of the stupid thing? All right. Yeah. All right. All right. Well, here's the question, right? You know, is this going up or down? Well, if I were drawing it based on a fib, I suppose I would do it this way. Okay. On a 4-hour. Oh, somebody asked about the discount. I don't know. I don't have it set up, but I guess it begs the question, would you open up a live account at Trader's Way to get a $555 discount from the swing trading course? If a few people say yes, then I'll create it, and then I'll give Trader's Way the coupon code, and I'll say if anyone contacts you, like you just contact support, and they would give you a coupon code, so the support people would verify you have a live account. So I could set something up like that, but you'd have to want it. I mean, I don't know. I'm not selling you it. If that's what you want, I'll do that for you. So 10 hours of videos, right, for 450 bucks, 444 bucks. All right. So anyways, Ahmed wanted me to draw a Fibonacci study on Aussie N 4-hour. There. Okay. So the idea now would be, okay. But see, I'd be careful here because you're supposed to use Fibonacci in a trending market. And I don't know if I would be super excited about this trending any direction. This retracement was already a 382, and we're supposed to be making a 1618, but it failed. So I don't really know if we're in a hardcore um, bullish trend anymore. So I probably wouldn't even use a Fibonacci this way. But you asked me to draw it. I don't know why, but right. Okay. My question is from up to down, or how to find. Oh, you don't know how to use fibs. All right. I guess that's a different question. All right. First of all, you need to know whether the market's trending. This is a tool that used in trends. If it's moving sideways, like up in here where we currently are, you do not use Fibonacci. It's the wrong tool for the market conditions. Okay. Now, the second part of using a Fibonacci study has to do with what you're doing in the trend. If the trend is going up, right? When the trend is going up, then you need to buy low. Okay? So what does an uptrend look like? An uptrend looks like a higher high, retracement, right? And then it starts heading back up because it's a high, right? To make a new higher high. Okay? That's what an uptrend is. Okay? Up, 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 down, down, buy. Up, 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 down, down, buy. Now, another part of this is that if the market is moving up very aggressively in a bullish market, it'll have a little bit of a retracement, but then extend farther because it's unbelievably bullish. Everybody's buying, nobody's getting out, okay? And that would be an aggressive retracement. A small retracement would predict a farther extension. Now, what if it was a significantly larger retracement? Well, then either a lot of bulls got out of the trade, even though the market stayed bullish, or maybe some bears tried to stop this. But nonetheless, the larger retracement would predict a smaller extension because it's bullish. It's just a lot less bullish than it used to be. Okay? So that's how we use Fibonacci. Okay, so let's take a look at here. If you're measuring an uptrend, okay, you want to buy, you say, wow, look at this uptrend, how fantastic. But you don't want to buy high, you want to buy low. So you observe these retracement levels. I have them identified as 382, 50%, 618, and 786. Okay, so a 50% retracement is still bullish, okay, and will predict that you're heading up. Okay, okay. Now, there are some rules here. Like I said, a small retracement is going to predict a large extension. Okay. And a larger retracement means there's less bulls because more of the bulls took profit up here. And that retracement is going to predict a smaller extension. Okay. You got it? 50% will be somewhere in here. Okay. Either the 618, 1382, probably 1382. Okay. But it could go a little higher. It's halfway. It's not actually a fib number. Now, I have a 786 here because sometimes it'll make a 786 retracement, but that is a huge red flag. And if it makes a higher high, I'm only expecting 121.4. But in fact, often what I'm looking for, depending on what else is going in the market, pivot points, psych levels, and all that kind of stuff, I'm actually thinking that it'll probably end up tracing on us. Okay. And then lastly, if you find yourself down here, let's do it that way. If you find yourself down there on the pullback, 100% pullback, okay, it's not a retracement, it's a reversal. Okay. Now, in conjunction with Fibonacci, you use price action. And really, if you've studied Elliott Wave, Elliott Wave is primarily price action and Fibonacci. That's all it really is. And so what I do, and let me go back to like a chart here. Let's do template standard. Okay, let me clean this up a bit. Let me zoom in a little bit. Okay, so the way that I trade with price action is you don't really need the fibs. You don't even really need the moving averages. In fact, We'll just leave it like that. The golden rule really comes down to what used to be support becomes resistance. It's called role reversal. Okay? And what I mean by that is, I wonder if we can get lucky enough and back out a little bit more. Yeah, okay. So let's start here. Let's start at the beginning here. All right, so this was making a series of higher highs and higher lows. And suddenly, you see that this moved all the way down. You see this? And this low is lower than this low. So there cannot be an uptrend anymore. Said an uptrend is a series of higher highs, higher lows, higher highs, higher lows, higher highs, lower lows. Lower lows don't exist in an uptrend, right? So we know at this point when the bottom here is breached, technically it's become bearish. So what I tend to do is drag it out, okay? And this old support becomes resistance in the future, okay? Now, if you were trading with Fibonacci, you would just draw a Fibonacci study, and it ends up being exactly the same thing, right? Then it makes a new lower low, so now we're down here. It's lower relative to this. So the old support, right, should become resistance in the future. Or, of course, you could use Fibonacci, right? You would have done it this way. So on and so forth, right? And this works on all time frames. So like that's a 4-hour, but how about a 15-minute chart? It's all the same. I'm trying to squeeze this in there. There, better. Okay, let's do it that way. Okay. Lower low. Bring this across. That's a sell zone, right? Lower low. Down here. Bring this support. Should become resistance in the future. Okay. Lower low. Take the old support. Right. Here's your sell zone in the future. Lower low. Should be a sell zone in the future. Okay. Even this low, you could use that as well. You can see it, and it did work for a while. Okay. And now instead of just you eyeballing it, right? Like roughly when it makes a lower low, you say, ah, well, somewhere up around here, I want to sell again. Makes new lower low. Up somewhere around here, I want to sell again. New lower low. Up somewhere around here, I want to sell again, right? So on and so forth. You could use Fibonacci instead. To me, it's the same thing. It doesn't matter, right? That's a sell zone, right? That's a sell zone. Makes a new lower low. Adjust your, right? There's the low to the old high, for example. New sell zone, new low. Adjust your fibs. The old high, right? Sell zone, right? New low. You just keep adjusting your fibs. I guess you do it this way, right? Sell zone, new low. And you just keep adjusting your fibs, right? So now you could be drawing this, right? And you just rinse and repeat. What about ABC retraces? Whatever. They're all the same. And call them whatever you want. It's all the same. Doesn't matter. Use your fibs, use it patterns, but it's just price action. Think of it, how really simple this is. If the market's falling, sell retracements. And keep doing it until it makes a higher high. Okay? That's it. We don't need to overly complicate it. Okay? What are you going to do on the yens? Are you going to try to catch the yens? By the way, the stock market opened. Okay, what do you want to do? You want to start with the beast? Okay. So I like to simplify things first. Would you consider this support? Now on Monday, this green zone was identified as the bearish target, but as sort of as a candlestick area and stuff like, does this look like support to you? Naomi says yes. So if you consider that support, then we know one thing for sure. You cannot sell it. No matter how bearish you are, you'd be a fool to sell it there. And you say, well, Wayne, what if it keeps falling? Good. Who cares? Okay. So this leaves only two choices then. If we know you can't sell it, then you either don't trade it at all or you look to buy it. Does that make sense? We just discussed the role reversal idea, didn't we? Or a Fibonacci. For example, you can measure it this way or this way. Okay? And that's that. So try to simplify things. Identify areas where you can't buy it or sell it, and at least you simplified things. You took away some of the opportunities, for example. Okay. Okay, let's say you're extremely bearish. Did you wait all week or all day for the opportunity to sell at the weekly support pivot? Is that what you would do? Like if you were writing a book on how to trade, you'd say, well, don't sell it here, 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 don't sell it here. But now go ahead and sell it at the weekly support pivot. I mean, that's what you would recommend, selling at the monthly support? Well, obviously, the answer to that is no. You cannot sell it there. There's no way someone in their right mind would sell it there. So, if you're a bear, you don't sell it there. Where would you sell it? Well, how about the 21? Carol, it's just part of the pivot point indicator. These are weekly, but you could probably, I think you can add it on, right? Open, high, low, close, ask line, period, separation. There you go. That's how you do it. Okay. So you see there's a difference here. I get my pivots on Sunday. This is Monday. So often when you hear me talk about swing trading and stuff, I'm making my trades on Sunday. Now, for example, if I was a bull in euro yen, I would have bought this. I would have lost money, but it doesn't matter. I'm just telling you what I would have done if I was bullish. Does anybody think I'm bullish on euro yen? I have not been bullish on the euro for years now. So you know that that's not something that I'd look to do. It'd be like the last of the yen pairs for me to buy. Okay. By the way, did anybody watch the 1 hour interview I did with FX Street back in December? Did anybody watch that? In December, I said January, the Japanese yen will get very strong until the third week of January, and then it would make a false rally up in February, but then in March, the Japanese yen will get strong again. Anybody watch that? Right? So, for example, in here I said the yen pairs would fall, then there'd be a false rally, and then the Japanese yen would get strong again going into April 1st. Did anybody see that? And is that true, or am I making it up? That in a live interview with a volcano behind me and a three-piece wool suit in the middle of the tropics, which is stupid, of course. But I discussed over 3 months, almost 4 months of price action of what will happen on the yen pairs. And I was asked very detailed questions over the course of the hour of how and why it would do it. Looks like I got pretty lucky. Really? Oh, Peter was there. Yep. Andrew. Yep. Go back and watch it. I tell you, it was like, I think it was about the 13th of December. And I said, I'm getting ready to buy the Japanese yen. It will fall until at least the third week of January. I don't really know. But in February, it will make a false rally, in which I will look to buy it back again going into the end of March. And I discussed specifically why. But I wasn't Forex Speaker of the Year. I guess that's not good enough for FX Street to give you 3 or 4 months worth of price action before it happened and explain intelligently why. Not good enough. You guys are a hard audience. So going back to the separators here. Tough crowd, man. Tough crowd. No, not that. Period. All right. So going into looking at it this way, and I got to back out a little bit. Oh, it's funny. I go in there, it gives me days. I got to go to 4 hour back again. Yeah, still kind of hard to see. But you can see Sunday, we're in the sell zone. And here's the target. So really, you should be out of these trades now, guys. In a week, how many live videos do you like? Every single day, Ahmad, go to tradersway.com. Tradersway.com is the best little Forex broker in the world. It's too bad I can't get my webcam going. All right, so let's see. Dollar index heading up. Looks, but taking a break. Looks like we're sort of pausing. 9:45. That makes the stock market open. Everyone's catching their breath. So South Africa is being downgraded again. People were asking, is there anything lower than junk status? Somebody said, well, we'll invent one for South Africa. Ugh, poor, poor South Africans. That sucks. So Fitch downgraded South Africa as well. Hey, we have more CAD news, man. IVPMI coming out at 10. I didn't know that. Yeah, well, I got to figure out this broadcasting software because it updated and deleted all my settings and everything, just deleted everything. So it was a really good upgrade. The funny thing is, over the last year that I've been doing these non-farm payrolls with this software, every time it said, "There's an update. Do you want to update it?" No. The next month, "There's an update. Do you want to update?" No. Next webinar, "There's an update. Do you want to update it?" No. So here we are. Today, I fired up to start the webinar and it says, "You have to update." What? Don't you tell me what to do. So anyway, so I had to click OK and updated and deleted all my settings. You're like, see? That's why I didn't want to update. So I got to figure out now how to display the window instead of display the Trader's Way platform, the MT4 platform. But it doesn't seem to recognize my video cards because I have 18 screens, and apparently it only recognizes my onboard video card. So I can't show you the screen, but I can say display this particular MT4 platform, and it does. So it kind of sucks, but we'll figure it out. All right, so I'm just looking around here. We're going to get some more CAD news is what I was trying to point out. So we should get used to that. Lonely. You guys liking the CAD? Oh, I'm sorry, Sam. You thought what? Lovely, with your smile so warm and your teeth so green. So yeah, so IVPMI, that's actually a pretty good market mover for kitty cat. Check the euro. Why? Everything is sort of stalled out. I have no thoughts on the Turkish lira. Sorry, right? I'm a G8 guy, G10 guy. Turkish lira, have fun. So back when I did trade the lira, the world was different, and there was a lot of hope for Turkey because maybe they're going to become part of the European Union, and everything was already overinvested and overpriced in Europe. Everything was overpriced in the United States. So emerging markets were the big thing, right? That was the big hope. And Turkey becoming part of the EU was a big deal, and getting their banking system together, getting other parts of their economic society pulled together, um, led to potential opportunity to buy. Well, all that's gone. All of that's gone. It's all gone. All that hope and potential has been wiped away by reality. So, I don't know. So, it's just not the same world. The world is still risk averse. Okay. So here's Kitty Cat. You can see Monday was a buy, Tuesday was a take profit, Wednesday was a double top, and here on Friday it's moving its way back around. Okay. And this is the market rolling over, so to speak. Hey, Ryan, if you only had $1 billion, would you invest all the $1 billion into Turkey? That'd be the first place you'd decide to put your money. How far away are we from the news? 6 minutes. Okay. Uh-oh, is that right? Thanks, Ed. I'll keep an eye on it here. Oh yeah, yeah, that was like 45 minutes ago, Ed. Truck reportedly drives into pedestrians and crashes into a department store in central Stockholm. Yeah, yeah, that was so 40 minutes ago, bro. It's already priced in. Yeah, no, no, I get it, Ryan. Right, I get it. I know what you're saying, but it's the thought process,
25
right?
minutes or so into U.S. trading session.
So other investors are going to think that way too. But I'll tell you what, I do speak with ultra high net worth individuals, um, and the world is a very difficult place now. um, there, there's not a good place to put a lot of money. Europe is collapsing. No one wants their money locked into euro. They don't want to put it into London because Brexit is such a big risk and that currency is tanking. So they're like, well, London isn't a great place. And then you're like the United States. Well, the economy is good, but it's so overregulated that you're guaranteed to get a heart attack and an ulcer on the same day. So you're like, well, so it's a big, scary world. Like bankers are scared. And if you're a billionaire moving money around the world, it just sucks. So I would put all my money into South Africa. I'm sorry I couldn't do it without laughing. I was going to try to do a big speech on putting your money in South Africa, but I couldn't hold back the laughter. Sorry. Bitcoin? Never heard of it. So anyways, I'm just waiting. The news should be coming out any moment. Just looking around, guys, waiting for the kitty cat. Okay, mark your lines. Okay, this is going to be a resistance zone, obviously. And then we got to do a roll reversal. Okay, maybe just for fun. Okay, take a look at that. Target should be weekly central pivot. Doesn't give us a lot of meat on the bone. Yeah, Adam's talking about Aussie. I'd like to go over there, except, well, I guess I got time before the CAD. And I have to do it this way. Hang on a second. Okay, so we're at support now, so it should bounce. But the target here is 74 and a half, maybe 74-ish. All right, so 74 and a half. You're saying what did you say, 75? I'd say a little bit lower than that. Okay, going back to USD CAD. Okay. Any second now?
They're looking for wholesale inventories and IB. IV adjusted index 61.1 in March. Wholesale inventory revised at 0.4%. Wholesale sales 0.6%.
Okay, doesn't look like anything should kill the trend, right? So, and I want to address the question down here. Looks like Mark said it. Then the trend uh, changes the trend, right? No. So you have to get away from this idea that if it's going up, people are buying it. If it's going down, people have to be selling it. And that's not actually the entire case. It it could be going up. Let's say Aussie dollar could go up for a week, but no one really is buying it. So what could happen in a scenario like that is Aussie dollar. So this looks pretty boring. So let's go back to the Aussie just since we're talking about it. Aussie dollar should fall to its monthly support, which I've identified for us. Okay. We're at the basic one now, so you should actually prepare for a double bottom scenario. So if you get a reversal pattern here, it'll probably go up. For how long? That I don't know, but maybe the 21 or something, right? But if price falls into this zone, it will probably go up there. Okay? But what's happening is it's not that bulls are buying it, it's that the bears are taking profit. And this could go up for quite some time and then most likely continue the trend down. So you said a change of its trend, not a fundamental change in trend. It might be on smaller time frames like a 15-minute and an hourly chart be making a series of higher highs and higher lows. And you might say, well, that's a change of trend. Well, it's a change of trend technically, right? Which would be a shorter trend move. But at some point, fundamentally, it's likely to head back down. So change of trend? No, I would call it profit taking more than I'd call it a change of trend. Okay, so yeah, you might be short-term long. So like 2 or 3 days, you're buying it, but 2 or 3 weeks, you'll be selling it. So like here, it's going up, but no one's actually buying it. Now it's coming down because people are actually selling it. So what happened here? Well, that was the target last month, and we hit the target, and it counter trended because all the bears got out, and then all the bears got back in. Okay. So I'm just suggesting if it heads down to 74.5, you'll get true profit taking. Okay. And it may go up, but it wouldn't necessarily be a change of trend. So that was pretty quiet PMI. That was like nothing of a PMI. Okay. So not a good place to sell Aussie yen, not a good place to sell Euro yen, not a good place to sell pound yen. Now, if you were, you'd be selling it off that EMA, but still. CAD yen a little more elevated, but I feel like if you're selling that, you might be, shopping while you're hungry. And Kiwi, well, Kiwi's already busted through the weeklies, right? So we got to add monthlies here because the weeklies are dead. We already achieved the weekly goal. So looking at it from a monthly point of view, really we're supposed to be down to 75. So we got a ways to go on Kiwi yen. Okay. And it's not really moving very well pivot wise, but you can see lower low, lower high, lower low, right? What did I teach you? Roll reversal. Okay. Here's the Fibonacci, right, on that one. You can see it's a perfect 3A2. Even that doesn't overlap pretty well. So I would just say down to the support pivot. It's supposed to go lower than that, but I'd say at least maybe you can get there by the end of the day, which is also the end of the week. Okay. But ultimately, if you're going to be shorting Kiwi yen, your target is supposed to be down here for the month, right? So that means it could still fall next week or the week after next week. I can't grab that. All right, well, I'll just do another one. So really what you're hoping for is that. Capiche? I need to take a quick break. Why don't you guys write down some more questions? We'll be back in like 1 minute. All right, so we got a question about USD yen. The reason I haven't been looking at USD yen is under these market conditions, they are generally both strong or both weak. So why would you want to look at something that, is just relatively not the best thing to be trading? Okay, but nonetheless, let's take a look. Okay. By coincidence, of course, the current bottom of the market is the weekly support 1 pivot point, which means we have a range, right? We have a range. We're not trending. Means the upside target potential for a bull is only here. All right. So we're really set typically to create an inside candle. or in this case, an inside week, where this week we're not likely to make a lower low, nor are we likely to make a higher high. And we are consolidating. And in fact, you would probably say this, right? I guess I'll make it a little bit bigger. This is more like the range, huh? So it's just not a very good opportunity. I suppose you could have, caught the falling knife and bought it off the weekly support, but you were likely not that interested in buying dollar after a bad non-farm payrolls, right? So yeah, so I stayed away from this because I don't understand why you'd want to trade it. Okay. So in a in market conditions like this, I tend to want to let it break out and then catch the retracement. Okay. What else can I look at for you? We have 20 minutes. Let's make the most of this. How can I serve you? How can I help? Do 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 do. I want to go back to do golden oil. Yes, you're lovely. Bo 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 bo. So, once again, oil was supposed to drop off the red zone and maybe bounce off the roll reversal. Seems like it's doing that. Geopolitical risk can often push oil prices up, especially if the geopolitical event takes place in the Middle East. Syria is not necessarily an oil producing country, but any turmoil in the Middle East gets Americans pretty upset because they don't know where Syria is. But it seems like it could be a country that produces oil, and that scares people, right? So if it occurred in an oil producing country, right, let's say Libya, let's say Iraq, um, so on and so forth, then what that could do is threaten the supply, right? The supply chain can be threatened. And therefore, if supply falls, as I showed you before, prices tend to rise. Now, I use the supply of money and its impact on interest rates, but you could use the same thing. And if supply is diminished or the threat of supply, right, then prices will tend to go up. Now, what I'm looking for here is, and it's not quite yet, but I would like to see oil come down. Now, maybe oil wants to get to 55 or 60 for it to go down, so you don't want to be silly about selling. My next sell zone for oil is up here, as you can see, at 55. But what I'd like to see is oil come back down again next week. But we'll see. There's a lot of geopolitical risks going on, right? So we'll see how things go over the weekend. I wouldn't blindly sell this. I'm going back to gold. Hey, Cameron, we're doing gold now, bro. Okay, so we're back. We're back here. And let me highlight. This is a sell zone. I guess I got to redraw it. Okay. This is a sell zone at weekly R2. Let's go back in. Fell back down to support. You can see I have support highlighted. Looks like it bounced at support. It may head back up again. That's fine. But depending on how it behaves in here, if we close way up here on Friday, or let's say 5 minutes, guys, 5 minutes before the close on Friday, which is today, if we're up here above the weekly, I may want to sell and do a counter trend trade. But again, with the geopolitical risk, chemical warfare going on in Syria, and then the Americans respond with airstrikes and finger pointing at the Russians. There could be a lot of bad news over the weekend that could impact gold prices. So I don't think I'll treat it like just a normal day. If it was a normal day or normal week and we were up here, I would counter trade it. But who knows what can happen, right? Or how about, you know, the meeting with China goes bad, goes very poorly, right? That could also affect dollar prices, gold prices, and stuff. So I don't think I'm going to counter trend. In fact, I won't. I'll tell you that I won't counter trend today, even if I get the opportunity. Euro pound. Okay, I can do that for you. All right. How does that look? Okay. Doesn't look like an amazing trend. Okay. It's riding the 200, but it's not making higher highs. I don't know. There's got to be something better to do with your time, right? And your money. Maybe it turns north here. Yeah, it's your call. Okay. But see, I wouldn't buy euro. But I mean, you could, but I don't know. See, it doesn't make a lot of these, even though they move, they don't make a ton of sense fundamentally to me. So I could always wait and do it again some other time. USD Swiss franc. Take a look at that. Do 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 do. Okay. Monthly support target should be here. 101, almost 102. Any chance for USD? So you're saying short Into a 4-hour 21. Uh, I mean it's overbought, but it's not saying sell yet, is it? I mean, you could be doing it here, right? But you're cutting the corner. I don't even see a solid resistance yet. I think you're early, bro. I mean, yeah, I could see it rolling over here. I really could. But I think it's a bit aggressive, I guess, is what. Yeah, I mean, I totally get it. I'd rather do it a little bit higher, right? Like a little higher, man. Like here would be a better place. I have no weekly or monthly resistance. But I don't have a weekly swing for you. I don't have anything that looks like that's a solid trade for the USD Swiss franc. Okay, so I don't see it. I see what you want, but I don't see what would make other people go along with your idea. Okay, I mean the only thing I see is it's overbought, but remember it's overbought because everybody's buying it. So you'd be like the first person to sell it right here. So I'm not quite ready to drink the Kool-Aid. I'm still asking questions, right? When somebody says, "Here, drink this Kool-Aid," right? You either drink it or you say, "Well, why? Is there anything in it?" Right? I'm still asking questions. I don't want to drink it. A little higher would be better. Even higher than that would be even better. Okay. So I don't see the resistance yet. But I see what's happening here on a smaller time frame. But even then, you're selling into the 21. So like here you would have lost money, 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 here you would have lost money. Here, 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 and here you would have lost money. You know, and so now it's different. I'm not ready to believe that quite yet. Okay. Not quite. I mean, you're close. Okay. Any other pairs you want me to go through? I think we got time for one more. Yeah, sure. Is the dollar index helpful? Sure. So you got two indexes you can look at. Um, the futures contract, which is a weighted basket of major currencies, and then FXCM offers a dollar index, which is a non-weighted basket. I just got a message from my wife, my daughter, and my son and her are walking on the beach, warm beach in Florida, picking up seashells. And apparently, my daughter called me on her shell phone. Oh, USD CAD. You know what? We did USD CAD like at 10 o'clock. It's 10:24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24. 24 Come on, Irvington or Irving Gone. Really? I mean, seriously, didn't we do it? Maybe I'm going crazy. Didn't we do it? I thought we did this. We did do this. Look. No, look, nothing's changed in the 20 minutes. Yeah. Come on, guys. How about a currency pair I haven't covered twice? How about the CAD yen? You want to do kitty CAD yen? Why don't I give you CAD yen? Oops. And I don't mean to sound crabby, but I think people are coming in late and then sabotaging. No, I thought maybe I did CAD yen, maybe I didn't CAD yen. So maybe I did it here. ZAR, yeah. Sorry, I don't have enough screens to go over ZAR. Didn't I do one of these CAD yen? Could look at CAD yen, right? So what's the trend, up or down? Psych, it's neither. So yeah, just got to be patient on this one. What's the COP? USD COP. Is that like COP? What the heck's a COP? Maybe it's my screen. No. Why don't you ask me? Why don't I do Polish zloty? CAD Swissy. Okay, let me get my mouse. I guess I could just add it this way. A CAD Swissy. Okay. Okay, not so bad, right? The used to be resistance is now support. If you were a swing trader, your sell would be here on Monday and your target was down here. You didn't get it, but it's still valid. There is some chance that it does flip around, but you can see we consolidated. So I wouldn't call it trending. It may trend up though. I mean, if it breaks to the upside, it's a higher low, higher high scenario, which which is like the 1, 2, 3, right? You can see it here, right? So all of that would lead you to think up, but we're already supposed to be there, and we haven't gotten there, right? So like we came down, we hit the weekly central. We should be up here, all right? If we were trending, we were supposed to be here, like right now. We're supposed to be up here, but we didn't hit it. So it kind of feels like consolidation to me. All right, so this kind of feels like we're at the end of the week and maybe it just comes back around. So we have to just play it cool. Colombian peso. Really? Yeah. Yeah, I don't think I got Colombian peso. I'd like to go to Colombia and talk about it. Mexican peso? Okay, we can do peso. Ow. So peso. Ow, ow. So peso. Am I not seeing it? Hang on. Here we go. Peso. Yeah, I've heard great things about Colombia. It's a place I should visit sometime. Okay, so what are you looking at here? Uptrend or downtrend? There's the resistance. It didn't move a lot. I thought it would move more actually. Okay. I thought it would move more on the first day of trading. Uh, I mean, it moved in the right direction. It just didn't move based on the repatriation flow. So a little bit disappointing there. It's sort of like you're right, but you're not as right as you thought you'd be. Okay. Because on the 31st, you'd be selling in here. And actually, a few people sold it here that I know. And it just, it's working, but it's not working as well as you would have hoped. So, yeah, I mean, you don't give up on it, but I'm growing a little bit indifferent, right? But the trend is definitely down, don't you think? Down, 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 up, sell. Down, 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 up, sell. Right? Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. But you notice the down downs are producing less. Like this was a big move, moderate move, big move, moderate move, big move, moderate move. So maybe a big move? Or maybe the end. Okay. We're in a buy zone for bulls, by the way, on a monthly basis. Dude, the Americans sent 59 missiles? Wow, that's a lot actually, huh? Can you imagine you're at the airport and you're like, this is a lovely airport. And they'll say, boom, 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 boom. But it looked like hardly any damage for 59 missiles worth. What are they, 10 million each? So yeah, so these are supposed to break out like on the first of the month, right? So you guys know, I've taught you guys many, many, many times that this is a sell, um, and this is a sell, and this was supposed to be a sell where we are now, and it just hasn't produced yet. But maybe it's slow, right? Maybe it's slow. So, anyways, let me thank FX Street for hosting again. I'm here to earn your loyalty and respect, and if I have earned your loyalty and respect, or at least even you'd like it more opportunities for me to earn your respect, I hope you go to tradersway.com and open an account. Even if it's a demo account, it'll take less than 1 minute to get it to go through that. You can choose a variable spread account. You could do an ECN account. You can do a fixed spread account depending on your needs. You can test out our spreads. You can check out our execution speed. You can talk to our support staff, really get to know us, and most importantly, get to work with me every single day. So if you could go to tradersway.com, open up even a demo account, that would be great. It didn't look like anyone was really interested in paying money for a swing trading course, for a video only course. So maybe I'll release that in the summer or something. But without further ado, peace on earth. May the pips be with you. May your profits be above average. Thank you again to FX Street. They're tall, good looking, kind hearted, athletic, intelligent people. Carol asks about my buy and sell zones. They're pivot points. So again, if you don't know how to use pivot points, you really need to take my swing trading course. But my pleasure, Albert. I'm glad you're finding success. Sounds really cool. Right? Well, thanks to Bista. And if for anyone in Nepal, you should check out Bista on TV. He is a foreign exchange analyst on TV there. Mike says he'd be interested in the swing trading course. You know what? Maybe I'll do it in the summer. Like if 10 or 20 or 30 people were like banging down my door to do it, I'd take the time to do it. But you know, I just nah. I'll release it in the summer. Give you something to do during the quiet period, I guess. Oh, thanks, Ben. Carol, I already answered that. They're pivot points. Okay. And again, if you don't know how to trade pivot points, you'll need to take the swing trading course. It relies heavily on pivots. Yeah, I guess, Ryan, I need a break though. I'm tired. That's nice, Ben. I know lots of people voted for me. It's quite an honor. Peace on earth. May the pips be with you. May your profits be above average. Cheers.